So this ruling shows that the banks never gave any equal consideration. So I want to make note that the bank is the plaintiff, Jerome Daly is the defendant, and right here we're going to define what consideration is. So everybody knows consideration is the main element of a contract. Without consideration by both parties, a contract cannot be enforceable. So if it's shown that they did not provide consideration, they cannot enforce the debt and they cannot make a claim to it, and they cannot tell you you owe them money. For instance, if a person used the money to purchase an apple, the apple is the merchant's consideration and the money is the person's consideration. So if they never gave, if one of these two sides never gave the apple or never gave the money, there's no consideration. That is exactly what happens here in this case, and every single time you get a so-called loan. So let's read. Plaintiff is the bank, created the money and credit upon its own books by bookkeeping entry as the consideration for the note and alleged failure of consideration. Okay, failure of consideration. If they did not provide consideration, there's no contract and it's not enforceable. The issue were whether there was a lawful consideration. So that's what they're talking about here. Mr. Morgan. So Mr. Morgan is the lawyer for the plaintiff here. Admitted, so the plaintiff, the bank admitted, the lawyer for the bank admitted that all the money or credit which was used as a consideration was created upon their books, that this was standard banking practices exercised by their bank in combination with the Federal Reserve Bank of Minneapolis, another private bank. We're not going to talk about that too much right now, but there it is. It's a private bank. Scrolling down. And then he's saying that he's trying to say, oh, well, he waived the rights because he paid. The jury returned unanimous verdict for the defendant that because of failure of lawful consideration, the note and mortgage dated is null and void. That the sheriff's sale, so this was the house was under foreclosure, so that the sheriff's sale of the above described premise held on 1967 is null and void and of no effect. There was no contract. Null and void, no effect. The plaintiff has no right, the bank has no right, title, or interest in said premises, the house, or lien thereon, as is above described. Okay, let's go down to the memorandum. Plaintiff admitted that it, in combination with the Federal Reserve Bank, both being banking institutions incorporated under the laws of the United States, are in the law to be treated as one as the same bank. So Bank of America, this bank here, every single bank, Wells Fargo, if they're branches of the Federal Reserve Bank, they're treated as the same as the Federal Reserve Bank. That's what it's saying right here. And both being banking institutions incorporated under the laws of the United States are in the law to be treated as one as the same bank, did create the entire $14,000 in money or credit upon its own books by bookkeeping entry. They just made a bookkeeping entry and then they made you be a slave for 30 years and pay interest. You're paying like 2 or 3 times this. They did not do a single thing other than write a number in a computer and put it in an account with your name on it. And now they want you to be their slave for 30 years. Does that sound fair? Of course not. The money and credit first came into existence when they created it. Mr. Morgan, and then, I mean, this whole thing is about foreclosure. And then if you can't pay for a few months, they'll come and take all your equity. They'll come and try and take your house. They'll do everything. That is wicked. The money and credit first came into existence when they created it. Read that 20 times. Mr. Morgan admitted that no United States or statute existed which gave him the right to do this. Mr. Morgan, the bank, admitted no United States law or statute existed which gave him the right to do this. A lawful consideration must exist and be tendered to support the note. There's no support for the note. The jury found that there was no lawful consideration and I agree, this is the judge. Only God can create something of value out of nothing. These people are pretending to be God, and if you're paying them and serving this system, then mammon is your God. Plaintiff The bank's act of creating credit is not authorized by the Constitution and laws of the United States, is unconstitutional and void, and is not a lawful consideration of the eyes of the law to support anything or upon which any lawful right can be built. Can you believe this? It says it right here. The emissions of bills of credit upon the books of these private corporations for the purpose of private gain is not warranted by the Constitution of the United States and is unlawful. Do I need to say anything else? It's all self-explanatory, black and white, right before your eyes.